Hello everyone, welcome to this video tutorial. In this tutorial, we're going through the technical analysis indicator moving average. And this is also our first video in the indicators playlist. So in this playlist, we have created the standalone video tutorial for each indicators that provided by technical analysis tool. At the first release of this application, we only provided some limited number of indicators, but we picked those indicators which are most commonly used by traders. Um, in the future releases, we definitely will introduce or add in more indicators and into this application, in which the application can be more empowered by more indicators and help the traders or users to make more uh, better analysis. Okay, let's go straight into this tutorial. Let's bring up our application. Um, as you can see, I have already imported data. Right now, I have already opened up the Afterpay Touch share market share chart, and also I bring up our volume. The way to bring up the indicators moving average is you have to go into this drop-down list and you click on that. Once you click on that drop-down list, you can see this is all the indicators so far we provided. You click on any one of them, you bring on that indicator. In this case, we want to turn on moving average. We click on that, the moving average is added to the chart. The moving average is very special. You can add multiple of them, as you can see, as many as you want. In this way, we allow the user to create to adding a cluster or group of moving average into the chart. Okay, let's close some of them for now. All right. As you can see, once you open up, added the moving average into the chart, and here is the area that you can configure the moving average inside the chart. Let's move on the configuration items from top to down. It's very simple. The first one is the moving average type. So if you not check this EMA checkbox, which is exponential moving average, and then you're drawing the simple moving average. But if you check this EMA, means you're drawing an exponential moving average. So the exponential moving average is a weighted average that it gives greater importance to the price of a stock in more recent days, making it an indicator that is more responsive to new information. So the EMA is follow up the chart and the price action closely, right? It's more sensitive to the chart, to the price changes. As you can see more zigzags because turning points. But if you uncheck that, as you can see, the simple moving average is actually more smooth. Okay. So the second one is the average on. Basically, most important part of the configuration for moving the average is you pick up how many units you want to use. At the moment, default is 5. Depends on you open up a weekly chart, then that means the 5 weeks moving average. If you open up a day chart, okay, so that's 5 days moving average. Monthly chart, you're drawing 5 months moving average. Okay, let's say 20 weeks moving average. Let's showing an exponential moving average here. The third one is the calculation base. The moving average is calculated based on what. So here you can configure what. So basically default is the closing price. The closing price is most important in our point of view. The price that's the closing price is actually mostly used as a default for using to calculate the moving average. We have more about the closing price in the future videos, and we'll talk about it more later. Actually, the open in here you can change the calculation base closing price, open price, high price, low price. Okay, so all of them you can use them, and also you can use a combination of those four. For example, if you pick up the medium, that is your high price plus low price divided by 2. Typical, you can using the high price plus low price plus C means closing price and divided by 3. Alright, you can even have the weighted price here. So pick up any one that is best suited for your chart. Yep, so you can do this type of configuration here. The second one is the line width. Of course, you can draw thicker or linear or thinner lines here. Color means you can change the colors. So you can also have more options in the custom color if you use most of them. You can have the extra here. So usually I think here is more than enough. Now the second one is the last one is the dash offset. So dash offset is you can change the line draw in the dashed offset. Then you can see this dashed line or solid line. The last one is the volume. Let's turn on and turn off this one. The volume you have to okay, so if you pick up the volume from here, that means you are drawing a moving average based on the daily or weekly transaction volume. So the moving average line shows you the level. If you see the more volume spikes above that, if you put a 20 above the 20 moving average line, so which means the this week's trading volume is much higher than its 20 weeks average volume level. Right, so this can be useful in the filter creation when you want to find out some volume spikes. Sometimes you want to find out some volume shrink, like here. You can use this moving average on volume. Okay, cool. Let's move up that one. Yeah, so that's pretty much everything you can configure on the moving average. Let's talk about some of the moving average usage use cases here. First of all, the reason we have this moving average indicator is we want to smooth out the price fluctuations, right? And the moving average is a good indicator to as a trade follower indicator. So the moving average can visually provide user a way to observe the trend changes or the trend directions or trend changes. All right, so what it really means is if you see the price actions but only see the charts and so many zigzags here, you know, but if you have the moving average drawn, for example 30 weeks, and you can clearly see the trend behind the scene, yeah, so what is the trend, the direction and the strength, etc., by looking at the angles. Alright, so the trend follower is moving average. That's the first usage, okay? And also smooth out the price actions. The second one is people usually use moving average as a moving average, moving support and resistance. So moving average can be used as a resistance or support. Okay, let's bring up another one. 10 weeks. Yeah. Let's say 10 weeks. Okay. As you can see, if you only see that blue one, which is 20 weeks simple moving average, as you can see, when in this period of time, this 20 weeks moving average provides support for the price. But when the price when the shares breaks out and moving up as a more strong upper trend, as you can see in this period of time, the 10 weeks moving average provides the support for the price movement. Okay, so that's what we mean by using moving average as a support or resistance. Okay, cool. And another option, a use case that people usually do is using moving average as a as show as a selling or buying signals. What they usually do, this method is you bring up a slower moving average, for example, 30 weeks moving average, and also you have another moving average draw. You can bring up the 10 weeks, or maybe you want a faster movement, so it's 5 weeks moving average. So you have a faster and a slower moving average. Okay, so um, so when the faster moving average cross over the slower moving average, people buy. Okay, so when the faster moving average drop down and cross down below the lower moving average, here people sell. Okay, in here you can see this method do provide some profit, but right here you can see another time when the faster moving average move above the slower moving average, people buy here and you can sell it. So in this time you have a much more profit. Yes, so this is the one of the usage people usually use this method to create buying and selling signals. When I bring up the candles, yes, it does make sense. This method actually, I want to, there is some caveat on this method, and this method only works when the share is actually trended very well. So there is a clear uptrend here, so you can use this method. But when the overall trend is not clearly in trend, upper or downtrend, instead of that, they zigzags and in a very solid consolidation status like that, the trend is not clear, and this method doesn't work pretty well. Okay, so this is another use case of the moving average. There's another one. It's the group. We're using group moving average. We're using moving average as a indicators of. We're using moving average as the average cost of past buyers or sellers. So the moving average means the average cost for past 5 weeks. The green line means what's their average cost to buy in this share. 30 weeks moving average in the blue line means the people in the past 30 weeks, is even longer term investors, what's their buying price. In this, if I bring up a group of a moving average, we can clearly see the cost, the average cost, their behavior, what's the differences between those buyers or sellers. So, okay, to better demonstrate what I really mean is I'm closing up this one and bring up my pre-configured opening chart mode. Let's bring up the same chart. Okay. All right. I can turn off my candles to better show you guys the cluster for moving average. The last way is the moving average actually can provides the average cost differences, right? So in here, as you can see, the red line means the 5 weeks moving average, and the golden line down here is the 50 weeks moving average. So if that means the average cost at the moment in time when the arrows pointed here is in this particular week, the longer term, the long-term investors, they have very low buying prices cost here, and the more recent buys they have to buy in a very high price. So which means the people who jump in this, who bought this share 50 weeks ago and during this period of time, they have much lower buying cost here. Okay, so what they can do is they can selling into those more recent buyers, because right now, and you have a lot of profit to take. When these two, the fastest moving average and the slower moving average, have a greater gap here, which means you have more pressure on the sell side because people might do the profit taking. To the contrary, when all the moving averages cluster each other, like here, um, farthest moving average and the lowest and the slowest moving average, and they are clustering together to form the point. This is a very ideal price to buy, right? Because if you buy now, so you're more recent buyers, okay? So your buying cost will be pretty much the same with those people who bought in the past 20 weeks, and pretty much the same with people who bought in past 30 weeks, 50 weeks. So everybody in the same line. So you won't have much selling pressure. So usually price tend to take off when the moving average cluster each other is based on this reason, I think. So yes, you can use this kind of moving average clustering or spread up as the buying and the selling signals, right? So in our application, you can create filters to describe this situation, and you generate your market scan, and you decided to buy or sell. Okay, so this is the last use cases that we think for the moving average. And unless you guys have more questions to ask, and you can always leave your comments below. We'll answer your questions because this is just the tutorials on how to configure and turn on and off these indicators in our application. In our later playlist, especially in those market scanning, filter creation, those playlists, we will come back to talk more about the moving average, because this is really very, very important technical analysis indicator. We definitely have much more to talk about it. But in here, as long as you know how to use it and bring it up and turn it on, how to configure it inside our application. So I think that's everything in this tutorial. Hope you enjoyed the contents. Thanks for watching, and I'll see you in next tutorial.